we start with this new exercise, I suggest maybe we quickly take that 10 minutes break and then let's come back quickly at past, and then we can continue again. I think by then everybody will have rejoined, because in any way we'll still have to wait for them to rejoin back. So let's use this time to quickly take a break and then we'll come back.
Thank you.
Okay.
Populate just with everybody so that we can sort of have it as well.
So we're coming back at 30.
Yes, let's come back at 6:30.
Yep.
The naughty.
Yeah. Yeah.
Check out the flag. Wait, we're missing somebody. Who's 18? You guys maybe don't show up. Forget about that. You, question. Do we have weapons? No, we do not have weapons. This is Biden's America. The only people who have weapons are his personal security, which makes perfect sense. Don't question it. Yes, sir. Yes, what? I'm sorry. Yes, sir.
Guys, where's the advocate?
And a one, and a two, and a one. All right, next, I want everybody to do 5 spinnies and then 5 twirlies. Go. What do you mean? What's the difference between a spinny and a twirly? It's only the hit.
We took a 10 minutes break. We should be back by 6:30.
Oh, okay.
Right, seriously,
Thank
guys,
you.
we have an ice cream there. Help yourself to some sugar milk, please. I know you guys get triggered when you have no toy.
Please mute. We don't want to listen to you watching series and dramas and stuff.
Guys, I sent my WhatsApp number. If there is a group chat on this module or the entire program, please add me.
Guys, whoever's eating chips or crunching whatever, please mute yourself.
Yeah, I think.
Okay, still around.
You have to lift both one of your legs at the same time. You have to lift one of your legs at the same time.
Just one leg.
Switch leg.
Look, I leave it. Yeah. Okay.
Hi everyone. I've also added my number for the WhatsApp. Please may I be added?
No.
Waar is dan nog? Ja, ek wou eintlik vir haar vandag sê, maar sy is op haar laaste pakkie Wang Piet. Oei.
Wat is het?
Ja,
Wat is het?
it's the band of my ears.
Oh.
Yes, it's as bad as pregnancy.
How would you know?
Ja, ek kan nie. Ja, sê ek nie. Ja, my baas plan is nie. Ek nie sê nie. Ek kan nie, ek kan nie gaan nie. Ek weet nie of my pa nog, ek kan nie vir hom op sê.
Okay, I want to believe that everybody has rejoined now. And I would like us to now proceed with that statement then. Please, you will see that in the next 2 to 3 pages there, it's a solution to this exercise that we are going to do now. I wouldn't want you to try and look into that solution. Okay. I wouldn't want you to look into that solution. I want you to pay attention to what I will be doing. You will look at that solution later, but for now, I'm much interested in what I'm recording here. You are not going to understand why certain transactions are recorded the way they are. So the best way, try to follow me so that you understand and you know how we record those transactions. So I am on a question in your manual. In your hard copy, it starts from page 87 to page 88. That is a question, that exercise that I want us to do. It's in your manual. So I want to deal with that exercise, and as I was saying, please don't look at that manual. Sorry, at the memorandum. Yes, 87 to 88. Don't look at the memorandum, because then you will not be able to test your knowledge, how much you understand, because you will be following the answers, and it's not going to be nice for you. Now, I'm going to read through that question, and as I will be reading, will be a recording where we need to record. You are appointed a conveyancer in agreement of purchase sale of immovable property by seller to purchaser. You have drafted the agreement of the sale on the instructions of your client seller. The agreements make provision for the purchase price of 750,000 rand to be paid by purchaser by way of deposit of 100,000 rand and the balance to be paid on registration of transfer. The agreements provide for the purchaser to pay all costs of registration of transfer. The following are the details. On the 1st of June, the estate agent sent you a pro forma account in respect of commission of 15,000 rand payable when due in law. And we have said when due in law simply means upon registration of the property. Therefore, it means on the 1st of June, we are not going to do anything. We are not recording anything. We just take that statement and keep it safe. There's somebody, Shiksha says, she can't hear me. I'm not sure if all of you can hear me.
You are beautifully clear.
Yeah, clear.
We
Okay.
can hear you very well.
We can hear
Thank
you.
you.
Hear you, yeah.
I think check
Thank
connections from your side there. Check connections from your side.
Advocate, can we ask that Nadia switches off her camera? We've been asking her to switch off her camera. It's disturbing us.
Okay, Nadia, can you please switch off your camera?
Yeah.
Thank you. Now, we all agree that on the 1st of June, we are not recording anything. Now, on the 3rd of June, purchaser pays with a deposit of 100,000 by check. Now, that is on the 3rd of June, and we are saying that this is client's money. Therefore, I want you, wherever you are, to open a T account. Please open a T account, and I want you to open a T account, give it enough space. Don't just throw a small T account. Give it enough space, because in your trust cash book, you are going to record a lot of transactions. Just throw a T account. Just throw a T account, and that T account, you will name it Trust Cash Book. Trust Cash Book. It's Trust Cash Book, and then this money that you are receiving from your client, we all agree that is client's money. And therefore, in this Trust Cash Book, on the debit side, which is your left-hand side, you are going to record it there, the 3rd of June. Deposit 100,000 rands. And then you say, this deposit of 100,000 rand, from whom are you receiving it? Who are you going to credit with the 100,000 rand deposit?
The purchaser's account, the purchaser's ledger account.
You are going to credit the purchaser's trust ledger account. Can we then open a T account for the purchaser? Can we open a T account for the purchaser? Okay, let me open a T account for the purchaser. Open the second T account for the purchaser. Yes.
Is it that the purchaser's trust?
Yes. Yes, you name it the purchaser's trust or the purchaser's trust ledger. Purchaser's trust. the purchaser's trust or the purchaser's trust ledger. See, I just wrote there the purchaser's trust. So you can do it like that. And we are saying, because you debited your trust cash book with 100,000 rand, that means what you do in the purchaser's trust.
You credit.
You credit the 3rd of June 100,000 rands XTCB. You debit your trust cash book with 100,000 rands that you are receiving from the purchaser. And then you say, because this is the purchaser's money, and then you open a ledger account for the purchaser, and then you credit the purchaser's trust ledger account with 100,000 rand. So you go to the purchaser's trust ledger account on the credit side. X means extracted from. Now, you go to the purchaser's trust ledger account and then you credit the purchaser's trust ledger account. You record it on the right-hand side of the T account of the purchaser's trust. That means you are done with that 100,000 rands received on the 3rd of June.
Sorry, advocate. Advocate.
Yes.
Meaning now we have opened 2 accounts only, just to record this number 3.
Yeah, at this stage, we only opened 2. We have opened the trust cash book. We also opened the purchaser's trust ledger account.
Okay, crystal clear. Thank you.
Okay.
Advocate.
Yes.
Sorry, how do we reference the one in the purchaser's trust ledger?
Purchaser trust ledger. I just said there on the purchaser trust ledger, on the credit side, I wrote 100,000 rands and then TCB or XTCB, extracted from the trust cash book.
Okay, thanks.
Yeah. Yes, you record 100,000 rands on the debit side of your trust cash book. Correct. You debit your trust cash book and then you credit the purchaser's trust ledger account. You debit your trust cash book with 100,000 rands. That means you have received that money from your client and on behalf of your client, the purchaser. Now, purchaser requires you to invest the monies in an interest-bearing account for benefit, and you invest the money with ABSA. Now you are going to invest the 100,000 rands. In other words, you now need to pay the 100,000 rands into the investment account. Now, look, Taka, the referencing, it does not necessarily have to be the same way that I have. For instance, in the trust cash book there, you can write deposit, purchase 100,000 rands, and then you can go to the purchaser's trust there again. You can also write there on the credit side, deposit 100,000 rands XTCB. It's still okay. It is still okay. As long as we are able to trace that money to see that the 100,000 rand on the debit side is the same 100,000 rand on the credit side of the purchaser trust. So that will still be okay. The most important thing is to be able to trace it, not necessarily the narration per se, but in any way you narrate it, it must be traceable through those 2 accounts. Okay. Now, you are required to invest this money, and they say you are investing it on behalf of the purchaser with ABSA. Now, we are saying for you to invest this money, you need to transfer the 100,000 rands from your trust account. You have to withdraw the 100,000 rands from your trust account and pay it into the investment account. Emmanuel, where you are given the dates, like in these instances, where you are given the dates, please make sure that you record the dates. Thank you, Shakisha. You're correct. You must record the date. Is it clear? Please mute yourself. Cleo, can you mute yourself there?
Hi, Advocate. I just have a question
Okay.
with regards to the checks.
With regard to that? Hello?
Yeah, this is also a check matter. So why would? Can you hear me?
I hear you, but you get cutting. Can you repeat that again?
With a check, I know you said earlier that it takes 10 days to clear.
Yes.
So why would we then transfer the money on the same day into the investment account as it was deposited with a check?
Yes, that's where I'm going. We are basically not going to invest it on the same day. That's what I was about to explain now.
Okay,
now,
thank you.
What happens with that check that you need to invest there? Please remember, it's a check. And we said before that check clears up, you cannot pay it to anyone. You cannot pay anything using that check because the 10 days has not lapsed. Now, when you invest that check, you need to count the 10 days and then invest it after 10 days. In other words, you count from the third and say, from the third, therefore, 10 days will be on the 13th. That means you can invest that money any day from the 13th of June. But you don't need to wait for that 13th of June. As long as you record the correct date here, you can record that correct date here and invest that money. What we are interested in is seeing that you invested it after that you counted that 10 days before you invested. Now you can come here in your trust cash book on the credit side. You can record any day after that 10 days. Or you can even say the 14th of June or the 13th of June. And okay, APSA investment. APSA investment, 100,000 rands. You can come here on the credit side of your trust cash book. And then you say there, that is the 14th of June, APSA investment, 100,000 rands.
Sorry, Advocate, I've got a question.
Yes.
Yeah, now that investment is being done on account of the mandate that the client gave. Now,
yes.
Is it necessary to actually record it to say section 86 subsection 4 investment, or you just leave it like that?
No, you can either say APSA investment, you can even say section 86 sub 4 investment.
Okay,
that's still okay, yeah. Now, as you can see, we have created our trust cash book. Cleo, they say you must mute yourself there. We said mute yourself, Cleo. People are struggling to hear. And then also PT, doesn't show me what's your full name, Petros. Also try to mute yourself there. Yeah, Z, you can either use either of those days. That's why I said you can write the 13 or the 14, even if you write the 15. The most important thing, we want to see you counting that 15 days. But don't invest it too long after the 14 days, because then you end up fighting with your client to say, why did you take long to invest my money? But at this stage, we are interested in seeing you counting that 10 days. Okay. Now you credited your trust cash book with the 100,000 rand that you are investing. So as you can see there, I just said the date, the ABSA investment, and I said 100,000. Or you can say the date, section 86 sub 4 investment, 100,000. And therefore, not the same date. You see that on the deposit on the day on the debit side is the 3rd. You receive the deposit on the 3rd, that you invested that deposit either on the 13th or the 14th. So the dates are not the same. The fact that you invest for how long, you will never know how long you are going to invest it. It will depend on when does the property get registered. Now you have created your trust cash book with 100,000 that you are investing. Now after crediting your trust cash book, somebody must be debited. The question is, who are you going to debit with 100,000 rands when you are investing?
The investment account.
Correct. Let's all open a T account for the investment.
Is it just an investment account or is it the purchaser's investment account?
It depends on how you name it. I normally say section 86. I'll write it here what I normally do. Section 86 for investment, and I say at ABSA. In brackets I say purchaser. This is how I personally normally identify it. Just say there.
Is it a ledger?
Yes, it's a ledger.
Okay.
It's section 86 for investment ledger at ABSA, and then in brackets I write the purchaser so that I remember. That is the purchaser's investment account. Section 86 for investment at ABSA, and then the purchaser. So that's how I normally record it so that it's identifiable. Now, on this ledger account, because we have created our trust cash book, what we do here on this ledger account?
To debit.
To debit it.
You debit it. Correct. Debit it there. That cash investment 100,000 rands XTCB. Now you debit your investment in terms of section 86.4 at ABSA with the same amount of 100,000 rand. Yes, you are correct. This is for the benefit of the purchaser because you've got the mandate from the purchaser to invest that 100,000 rands. Now, okay.
Should we use the same date as in the...
No, when you invest, you can use the 13th of June.
Okay. No,
don't use the 3rd, use the 13th.
Advocate.
Take it out of your trust account on the same day, and then that's the same day that you receive it in your investment account.
Thank you.
Okay. Yes, that's what I'm going to explain just now in Tlaganipo. Now, when you look at the investment account, it's a ledger account. When you look at that investment account, you will see that it reflects a debit balance. You see that? Now, remember we said that a ledger account should not reflect a debit balance. Now, with respect to your investment account, this is the only exception where a ledger is allowed to reflect a debit balance. In other words, your investment account works the same way as your trust cash book and your business cash book. And therefore, it means those three accounts, your trust cash book, your business cash book, and investment account, all of them receive on the debit side and they pay on the credit side. So your investment account is the only ledger which may legitimately reflect a debit balance. You get this type of question, this type of theory question many times. Which ledger account may legitimately reflect a debit balance? You simply say section 86.4 and 86 sub 3 investment. Those are the only ledgers which may legitimately reflect a debit balance. Like in this case, your section 86.4 is reflecting a debit balance, and that's what we mean when you say it may legitimately reflect a debit balance. Therefore, you don't, somebody said, why don't we credit the investment account? You don't credit the investment account because as soon as you credit it, it will be saying you are withdrawing that money. And it will not even allow you to credit it, because as soon as you credit your trust cash book, you can't post it to the credit side of whatever account that you are posting it to. If it's on the credit side in your trust cash book, wherever you post it, it must be a debit. Remember the double entry rule. You debit and credit, or you credit and debit. You can't debit and debit, you can't credit and credit. There must be a double entry rule. There must be a double entry rule. As you can see there, I have invested that money in my section 86.4 by debiting that account with 100,000 rands on the debit side. Therefore, the money is invested, and this money I credited my trust cash book when I invested it. As you can see here, it's credited on this trust cash book, and then it was debited in the investment account. Now,
sorry, advocate.
Yes.
To avoid confusing myself with section 86 and 84, can I just stick to the basics?
Yes.
Because I'm still not comfortable with section 86 or section 84, whatever it is. Can I just refer it in the most simplistic way and still get marks?
How you refer it? What are you going to say when you refer it to say?
Perhaps an investment on behalf of a purchaser.
Investment on behalf of the purchaser. That's still okay.
Yeah.
That's still okay. Yes, that's still okay.
Okay, because I'm wary of using an incorrect referencing, technical referencing, so to speak.
Yeah. Look, as long as you make us aware that this is an investment on behalf of the purchaser, automatically we know if it's on behalf of the purchaser, it means it's 86.4. Then that again is still okay. That's why I said the other day that there is no specific way of narrating this transaction. What is very important is that however you narrate it, make sure that we understand what that it is. Obviously, if you say investment on behalf of the purchaser, we know that the purchaser is invested in terms of section 86.4.
What about 86.3?
86.3, that was will be on behalf of the, what do you call it?
On your own initiative.
On your own initiative, and the investment will accrue to the Legal Practice Fidelity Fund.
But the purchaser will
Sorry,
still get
advocate.
some out of it, isn't it?
Advocate.
Yes.
Some interest.
You said earlier on that you have to explain to your client, or to the purchaser that you can make this kind of investment. So for you to then reduce to the section 8, subsection 3, does it mean the purchaser would have turned down that offer?
When you open section 86.3.
Yes.
No, not necessarily. Not necessarily. Let's say, for instance, you've got a a pool of money in your trust account. Sometimes the attorney will have a pool of money in their trust account, and in some instances, let's say, where you are not able to get hold of your client immediately, or you know that you are not going to be able to get hold of your client in an extended period of time to sign the mandate authorizing you that investment, then you can say, in that instance, let me take this money and invest it. And therefore, that investment will be in terms of Section 86(3) because you realize you had enough money in your trust account, but you could not get a mandate from your clients to invest that money. And for that reason, you simply took your own initiative to invest that money, and therefore it's going to be Section 86(3).
Advocate, could the purchaser claim this later to say that they weren't aware or they weren't able to give permission? Could they later say that they would wanted their money invested and claim that interest?
You mean if you did not invest in terms of Section 86(3)?
Yes.
Oh, yeah. If you did not invest in terms of Section 86(3) because you could not get anybody's mandate to authorize that investment, only if they come and you are able to get hold of them and they give you the mandate to say, that money of mine that you are holding, please invest it on my behalf, then you must immediately then either withdraw that money, get the interest that should accrue to your legal practice counsel, and then reinvest the money in terms of your Section 86(4). Alternatively, you can even speak to your bank and say, I have invested this money in terms of Section 86(3), but then the client came and he wants this money invested in terms of Section 86(4). Can I withdraw only the interest that has been accrued under Section 86(3) and then immediately change the investment in terms of Section 86(4), wherein that investment will immediately then start any interest on behalf of your client? And only Section 86(3 and 86(4) can be interpreted. They can Section 86. But Section 86(2) must always be in debit, isn't so? Isn't Section 86(2) your trust account? Unless if I'm mixing them. So is it possible to just leave it in the trust account? Yes, it's possible to leave the money in the trust account if you can't invest it, but you need to be very careful. Because if you've got a huge sum of money in your trust account, I think in terms of the legal practice counsel is that you need to look into your trust account and see how much money you had for the past 12 months. And the list of that money that you have, the lowest balance that you had during that particular period of 12 months is what you need to invest in terms of Section 86(3). If you don't invest that money, if you had the opportunity of investing it and it earns a lot of interest for the legal practice counsel, you might find yourself having to answer to the legal practice counsel why you did not invest that money. Because when you invest it, they get the interest. When you don't invest it, they will get a little interest that will get while the money is in your trust account. The interest still goes to them. That is why when you invest, they always say, make sure that you invest in an investment account that gives you good return. I'm just going to give you an example. Let's say the money is in your trust account and it's earning interest at 6% per annum. The money earns interest of 6% per annum. Now, for whatever reason, you take that money out of the trust account, you go and invest it somewhere. And wherever you invested it, is earning interest at 5.5%. Now you will see, then there is a problem because now you basically are robbing the legal practice council of that 0.5%. And if it happens like that and they find out in that way, they might or they will take you to task to say, why did you do it to them? Because after investing that money and therefore you basically reduced their interest. And if you don't give enough explanation, they may calculate the interest and you pay the differences from your own business account. So you need to be very careful when you invest.
Sorry, advocate. So you're saying it's your duty as an attorney to make sure that you find the best institution that offers a higher interest.
Yes. You need to get an institution that offers you higher interest. But in that hand place, that the money cannot be invested in these unit trust portfolios or these schemes that comes in and go. You need to make sure that you invest the client's money in the recognized financial institution. And if you've got a bank and you are not sure whether it's a recognized one, please take a phone call, make a phone call to the Legal Practice Council, tell them that there is this financial institution called M, can I invest in here? And then the Legal Practice Council will tell you, no, you can't invest that money with Bitcoin, you can't invest it there. It's a no-no.
Sorry, advocate, just a
Sorry,
question.
Advocate.
Yes.
Look, I've got a suggestion, advocate.
Yes.
That we first deal with the exercise. We hold our questions after dealing with the because look, the time is running.
Yeah,
And we might not finish this exercise because you are explaining, and we are lost on the way. So we rather deal with the exercise, then we ask questions later. That's my suggestion. Thank you.
Okay.
Supported.
As long as all of you are comfortable. Francis, there's no VPS anymore. What are you talking about? Okay. Okay, now let's proceed. We have just invested that money by debiting our investment account with 100,000 rand. Now let's read the next statement. On the 4th of June, you submit your pro forma statement to purchaser for the cost of transfer of 40,000 rand, including 10,000 rand for the transfer duty. And we are saying on the 4th of June, you are not doing anything. You are not doing anything because you are simply submitting a statement. No payment that you are receiving, no payment that you are making. And then on the 6th of June, you receive a bank guarantee from Standard Bank for 650,000 rands. And then that 650,000 rand that you are, this 650,000 bank guarantee that you are receiving, again, it's not money. It's just a guarantee from the bank. And then on the 6th, you are not recording anything. And then on the 7th of June, purchaser pays you the pro forma cost of 40,000 by check. Now you are receiving a 40,000 rands pro forma cost by check from the purchaser. Now the question is, where are you going to receive that 40,000 rands? In which account are we going to receive that?
The trust cash flow.
Trust cash flow, which simply means you are going to debit your trust cash flow with that amount, and that is on the 7th of June. Therefore, on the credit side, on the left-hand side, start with the date, the 7th of June. Pro forma costs or costs 40,000 rands. And whose money is this? It is the purchaser's money. That means, who are you going to credit with that 40,000 rand that you have just received on the debit side of your trust cash flow?
The ledgers, purchasers ledgers account.
You are going to credit the purchasers trust ledger account. Remember, you already opened the purchasers trust. You don't open the second one. It's already there. You just go there, underneath that 100,000 rands, and then you are going to write the date here. The 7th of June. And then cost 40,000 rands XTCB. You are not going to open a second trust ledger account for the purchaser, the one that you already have. You just go there, underneath there, you record the date of the 7th of June, 40,000 rands XTCB. That's how you record that 40,000 rand pro forma cost that you have received from the purchaser. Firstly, it is client's money. And because it's client's money, it must be debited in your trust cash book, and you say, whose money this is? The purchaser's money. You go to the purchaser's trust ledger account, you credit the same 40,000 rand from your trust cash book.
Just a question, Advocate, please, if I can just ask.
Yes.
So the 10-day rule with the check in this transaction doesn't take effect.
No, you are receiving it. You are not paying it. You must receive it. Despite the application of the 10 days rule, you must receive it. The 10 days rule will run while it's in your account.
Oh, okay. Okay, thank you.
On the 6th of June, yes, you don't record anything. And then we have just recorded the 7th of June. And the 8th of June, you pay the transfer duty. Now, the question is, from which account are we going to pay the transfer duty?
From the business.
The business account.
Correct. We are going to pay it from the business account. Can we all open a T account, a new T account for the business cash book? New T account for the business cash book. Then you open that T account, you head it business cash book. Business cash book. And remember, in the business cash book, you pay from the credit side. And therefore, you go to the credit side, and then you record the date, the 8th of June, on the credit side, on the right-hand side. 8 of 6, and then you say transfer duty. 30,000 rands. Now, after, okay. After, I'll go with you just now, Sharin. After crediting your business cash book with 30,000 that you are paying the transfer duty. Now the question is, who are you going to debit?
The purchaser's business ledger.
Purchaser business, correct. You are going to debit the purchaser's business ledger account. Let's draw another T account for the purchaser business. Let's do another T account for the purchaser business. Purchaser business. Purchaser business ledger. And because you have credited your business cash book at the purchaser's business, you are going to debit on the same date, the 8th of June. That is your transfer duty. 30,000 rands from your business cash book. That's how you record that transaction in both your trust cash, so your business cash book and on the purchaser's business ledger account. So you have credited your business cash book, transfer duty of 30,000 rand, purchaser business, and then you open the purchaser's business ledger account, you debit the purchaser's business ledger account with the 30,000 rand transfer duty. Now you'll see the purchaser's business reflect a debit balance of 30,000 rand And when the purchaser business reflects that business balance of 30, it shows you that the purchaser owes you 30,000 rands in business. The purchaser owes you 30,000 rands in business. So that is how you record that 30,000 rand that you are paying on behalf of the purchaser. Please remember, you must debit the client's business ledger account because the client must pay you. You record what the client owes you in their business ledger account, and you record what you owe your client in their trust ledger account. So it must be clear. When you record it in the trust, it means you are saying you owe the client, but you don't owe the client here, the client owes you. That's why you debit his business ledger account to show that later he must pay this amount of money. We'll do that later on, Muhara. No, the Parker, the transfer duty, we don't always pay the transfer duty from the business. We only pay the transfer duty from the business if that specific client does not have money in the trust to pay that transfer duty. Like in this instance, we only have the 100,000 rands which has been invested. The 40,000 rand, we say it's a check and it's not cleared. Therefore, we can't use it. Therefore, there is no money in trust for the purchaser. Therefore, we can't pay from the trust. That's why we pay it from the business. But let's say if this 40,000 rand here was cash, not a check. If this 40,000 rand was a check, then so it was a cash, then we'll have paid the transfer duty directly from here, not from our business account. Okay. Charlene?
Yes, okay. Africa, I just want to know, the investment account, is that a completely different, a separate account from the trust? So it has its own account number. So I assume that trust set of books will be kept separate from the trust?
You say it should be, the investment account will be separate from the trust?
Yes. And
yeah.
Then I just want to know, the purchaser's ledger account on the trust. Okay, there's 100,000 rand now on the credit side and 40,000 rand. But now, shouldn't there be any indication that that's been transferred to the investment account? Shouldn't it be debited now as well on the ledger of the trust?
On the ledger, on the purchaser's ledger?
Yes, on the trust ledger of the purchaser.
Okay. No, on the purchaser's trust ledger, when you invest, you don't debit the purchaser's trust ledger. The reason being, when you invest that money into the investment account, you as the legal practitioner, you are still in charge of that investment on behalf of the purchaser. In other words, you still owe the purchaser that money, but instead of keeping it in your trust account, you took it to the investment account on behalf of the purchaser. So you are still in charge of that. You still owe the purchaser that money. That is why when that investment mature, the investment company or the investment bank is not going to pay that money to the purchaser. The investment bank is going to pay the money back to you as the legal practitioner on behalf of the purchaser. So when you receive that money back from the investment account into your trust account, it is still not your money. So the purchaser's trust must still show that you owe the purchaser that amount of money. That is why when you invest, you don't touch your client's trust ledger account. You simply credit your trust cash book and then debit your investment account, and that's all the transaction that you record.
Okay, thank you, Advocate, because I thought if the money comes back from the investment account, it will be another transaction. So if it's not another transaction, that makes perfect sense.
Yes, okay, thank you.
Yeah, okay.
All right. Yes, your business account, even if it doesn't have money, you can still pay from your business account. The reason being, your business account can operate with an overdraft. So there's no need for the business cash book to have something on the debit side before you pay. That's why you see here, there's nothing on the debit side to show there is money available, but we simply credited it because you can operate with an overdraft. Okay. Now let's read the next statement. It says there, we have just paid the transfer duty. Number 6, you receive the bank, no, you pay the transfer duty on the 8th. On the 10th of June, the check for 40,000 rand is returned by the bank marked refer to drawer, RD check. I want you to look at that RD check. No, not RD check. I want you to look at the check that we have received from client. In which account did we receive it? Which account did we debit?
The trust cash book.
The trust cash book, and we credited whom?
The purchaser's trust ledger.
The purchaser's trust ledger. And now they are saying that that check has been returned now, which means who are we going to debit when this check is returned?
Purchaser's trust ledger.
Purchaser's trust, correct. Trust. You go to the purchaser's trust ledger account on the debit side. You record that date here, the 10th of June. And then you say RD check. RD check, and then you say 40,000 rands. And therefore TCB. You go to the purchaser's trust ledger account. Go to the purchaser's trust ledger account. On the debit side, RD check of 40,000 rands, and then TCB. And then you go to your trust cash book. Because you debited it here, in your trust cash book, you are going to credit. And let's go to our trust cash book. On the credit side, again, we write that date of the 10th of June. RD check 40,000 rands. Purchaser. Then you record it again here on the credit side of your trust cash book again, RD check of 40,000 rands that has now been debited on the purchaser's trust ledger account. That's how you record the RD check. Simply credit your trust cash book and then debit the purchaser's trust ledger account with that RD check of 40,000 rand, and then you leave it like that. That was on the 10th. Now you tell the purchaser to say, your check has been returned. And then the following day, the purchaser pays you 40,000 rand in cash. Now the question is, how do you deal with that 40,000 rand in cash? How do you receive it? How are you going to receive the 40,000 rand cash?
In your business account.
We received the 30,000 into the business cash book.
We received the 30,000 rand into the business cash book. Let's go to our business cash book, and then we debit the business cash book with 40,000 rand, and that should be on the 11th. 11th of June. You can say payment or repayment. Payment of 30,000 rands. And we say, who are we going to credit now?
Purchaser business ledger.
Correct. You are going to credit the purchaser's business ledger account. Correct, Munguni. Correct, Sherry. Correct, Claudie. Fredonique, also correct. And then you debit your business cash book, and then you credit the purchaser's business on the 11th of June again. That payment of 30,000 rands from your business cash book. You debit your business cash book with 30,000 rand. It means you are receiving, you are paying yourself that 30,000 rand that the client owed you. And then after paying yourself, and then you debit, so you credit the same client's business ledger account to show that the client has paid you that money. The reason you don't receive the money in trust is because it's no longer trust money, it's business money. He owes you the money, that's why you must receive it directly in business by debiting your business cash book and credit the client's business ledger account. And from the 40,000 rand, how much is the balance?
10,000.
10,000.
10,000 rand. And therefore 10,000 rand is client's money. In which account are we going to receive the 10,000 rand?
We debit the trust cash book.
Debit the trust cash book on the 11th of 6. Let's just say cost or cash 10,000 rands. And would you credit the 10,000 rand? Whose money is this?
Purchaser's trust ledger.
Purchaser's trust ledger account. You debited your trust cash book there, 10,000 rand. That shows you are receiving that money on behalf of or from the purchaser. Therefore, it means you need to go and credit the purchaser's trust ledger account. You come here on the purchaser's trust ledger account on the 11th of June, 10,000 rands, XTCB. And then your trust ledger account has been credited with that 10,000 rand, the purchaser's trust ledger account. And now, as soon as you credit the purchaser's trust ledger account, it means you are done with that transaction on the 11th of June.
Advocate, can you please repeat the transaction again?
Yes. What we are saying is, remember the purchaser owes you 30,000 rand in business, which you have paid the transfer duty on his behalf. Now we are saying, if the client, like the purchaser, owes you that 30,000 rand in business like that, and later he repays you. He repays you with cash. Then you must take the amount equivalent to what he owes you in business directly in business. Now the question is, how much did the purchaser owes us in business before this transaction?
30,000.
30,000 rand. Now he owes us 30,000 rand in business and he pays us cash of 40,000 rand. And we are saying, if that is the case and he pays you with cash, you must take what he owes you directly in business. And what he owes us is 30,000 and that is why we debited our business cash book. Remember, business cash book, debit means receive. We received 30,000 rands in business, and we're saying, who is paying us this business? It is the purchaser. Business goes with business. That is why after debiting our business cash book, we went and we credited the purchaser's business ledger account. And then after crediting the purchaser's business ledger account with 30,000 rand, we say from the 40,000 rand, the balance is 10,000 rands. Now we say, whose money is that?
The purchaser.
Whose money is that?
Debit the purchase.
No, whose balance is the 10,000 rand?
For the
purchaser's, the purchase.
That is the purchaser's money, isn't so?
Yes.
That is why after we receive the 30,000 rand, the 10,000 rand is our client's money. And because it's client's money, the 10,000 rands, we receive it in our trust cash book. Let's look here in our trust cash book on the debit side. Look, no, that's purchaser trust. Look on the trust cash book here on the debit side. You will see we have received the 10,000 rand, which is the purchaser's money. And after debiting our trust cash book, and then we must credit the correspondence trust ledger account. So not correspondent, but the purchaser. Therefore, if you look at the purchaser's trust here, we credited him with 10,000 rand because that is his money. See that? That's how you record that transaction. The month that it can count depends on the person that said the paper. Anything between 30 and 45 or 40. TCP stands for Trust Cash Book. TCP stands for Trust Cash Book. Now, the 20th, the transfer is registered. You receive interest of 10,000 from APSA. You debit the purchase a further fee of 350 rand for the investment and you account to purchase and seller. Now, here they say the property is registered. I want you to take out that one-page document that has got 8 steps. That's where we are going to start quickly. Just take out that document with 8 steps. And then at the same time, you can open your study manual. You can open your study manual on from page 84. The hard copy, you'll start from page 84. As we record those transactions, as I read, and then we will record those transactions. Because what happens is that as soon as they say the property is registered, then you need to quickly follow those 8 steps. Okay. Somebody's requesting a break there. Can we just make sure that it's only for 5 minutes? Let's take that break just for 5 minutes, and then we immediately start with these steps.
Thank you, Advocate.
Okay.
We are running short of time.
Advocate, while we wait, can I please ask a question?
Yes.
You said earlier that it's a general rule.
Wait, before you ask the question, can the rest of us please mute ourselves there so that I can hear the question? Okay.
Okay. You said earlier on that a trust ledger can never be in debit as a general rule.
Yes.
So why did we debit the purchaser's trust ledger with the RD check of 6,000?
Why did we debit the purchaser's trust ledger with an RD check?
Yes, of 40,000.
Now, after you debited the purchaser's trust ledger account, does the purchaser's trust ledger account reflect a debit balance? You will see after debiting that RD check, the purchaser's trust ledger account still reflect still reflect 100,000 plus 40,000 is 140. So 140 minus the debit side of 40, you still have a credit of 100,000. So the purchaser's trust is not in debit, does not reflect a debit balance.
Okay,
you can debit the account as much as you can. When you make payments, you can debit it as long as after you have debited it, you don't have more recorded on the debit side than the credit side.
Oh, so it's just the balance that must be, not the ledger itself.
Yes, that's the balance. The balance in that trust ledger, the credit side must always be more than the debit side.
Okay, thank you very much.
Okay, no problem.
Advocate.
Yes.
It's just that you release some of us. I wanted to suggest that seeing that now it's almost to 8 and the 5 minutes break is not going to assist us.
Agreed.
There's a lot that we need to learn, you Advocate. We don't have some of us don't even have a background in as far as accounting is concerned.
Okay. Look, I'll try to move nicely, but try to see if I cannot push so that by 8 o'clock we should be finishing it.
Okay.
Can you confirm your email, Advocate?
My email, I saw some people, remember this map 02. It's not map 2, it's map TLO maph02 I'll write it here again.
Sorry, Advocate.
Yeah, that is, yeah, okay.
Advocate, yesterday I asked that your lectures be uploaded because similar to what the previous speaker had said, we some of us are slow in understanding what you're saying. So referring to the videos,
is it not is it not uploaded as yet?
They are.
Okay, they say they are uploaded. Check them on your e-leader.
Okay, earlier when I did, they were not there. I'm sorry. I'll just go and check them again. Thanks.
Okay. Oh, there was Z. Must we end of every transaction with this charter? For example, 11 money received, 10,000 TZB. It depends where it depends where that money initiated. If it's the money that you have received from the trust cash book or is what you are paying from the trust cash book, yes. But if it's from the business, then it will change to be business cash book. Revision classes for a week before the exam. Yes, that can be arranged, Michelle. That can be arranged. Yes, please, revision will be great. Should not be a problem. I'll also speak to Zuki. And then you should also try to send messages regarding that, emails regarding that, but I'll also speak to her.
Hi, Advocate. I just wanted to maybe to suggest something to make life easier as well going forward. I know that a lot of us that on this program, we work and we probably find it difficult to check notes before the lecture. But I find it very helpful if you check the notes before the lecture because it kind of gives you an insight in terms of what you need to do and makes it easier to follow other than when someone is starting like literally on your lecture to read in terms of what is happening, because I think that's where we're getting a lot of questions and people being unable to follow in terms of what you are saying. Maybe familiarize yourself with the terminologies that are used as well, and maybe when we come to the lecture, we've got a sort of a vague idea in terms of what you're going to be touching on or how the exercises are being conducted.
Okay. I'll try when we are done with this class. I'll try to direct us what you will need to do before the beginning of the following class.
Thank you, Advocate.
Okay. Now let's go back to that question again so that we can quickly try to move. As Bongile, let me do it like this.
I'm sorry to disturb, Advocate.
Yes.
Yesterday we talked about having classes on Saturday, and we didn't actually conclude it.
The issue regarding Saturday.
Yes.
I'll also speak to Suzuki again after this class. Unfortunately, she I think she's got 2 classes. She's running between the 2 classes. She's not on with us now. So, but I'll speak to her, and we will know by tomorrow what the position is.
Okay, Advocate. Thank you.
Yes. So now, let's quickly start with step number 1 quickly. Step number 1 there in your manual, it says, on day of registration of the property, the following steps should be followed. Withdraw the section 86.4 investment, including the interest. In other words, the first thing that you do is withdrawal of the investment and the interest. And then it says, receive the invested amount and the interest in the trust account by debiting the trust cash book. Credit your section 86 sub 4 investment account with the invested amount and crediting the purchaser's trust account with 95% of the interest and the legal practice fidelity fund section 86.4 interest with 5% of the interest. Now, that's all you do at step number 1 from the day of registration of the property. We say you must withdraw the investment, the invested amount and the interest. And now the question is, how do you withdraw the invested amount and the interest? Just try and, okay, there it is. Now, I want you to go to those steps that I've given you, the 8 steps. I want us to go to those
Advocate,
steps.
can I just ask a question?
Yes.
We received the bank guarantee check from Standard Bank. At which point do we deposit that check?
Okay.
Not a check, we just received a guarantee.
Yes.
What happens?
As we are still going there. We're going to touch on it when we deal with these steps.
Thanks, brother.
Yeah. Now, let's look at step number 1. On that one-page document, I want us to look at that one-page document. As we do it, let's record. Then thereafter, I'll explain it again in detail. Now,
which page advocate?
There's this document that was one of the attachment on the on your link. This link that you were given. There were 3 documents attached, and this is one of those documents.
That one, unfortunately, I don't have it.
Can somebody share it with share it on the screen so that everybody can have it? But what I'm going to read here on this one-page document is what is there on page 84. It's just that here I try to make it as short as possible so that you know exactly what you are dealing with and which account you debit and which account you credit. Now, on that one-page document, I said step number 1, withdrawal of the trust, investment, and the interest. Now, 1.1, withdraw the invested amount. How do you withdraw the invested amount? Jonaves has shared it there, is there on the screen. Thank you, Jonaves. 1.1, it says, withdraw the invested amount. And the next question will be, how do you withdraw the invested amount? The answer is there. Credit the investment ledger and then debit trust cash book with the invested amount. Only credit the investment ledger with the invested amount. Let's go to our section 86 for investment. Let's go to our upside investment. They say we are withdrawing, and you withdraw by crediting that account. Let's credit our investment account. You come here on your investment account, and then you say the property was registered. What's the date? What's the date of registration? Is it the 20th?
20 June.
20th of June. Now, you come here on your investment account on the credit side. You record 20th of June and then withdrawal. You write withdrawal. Withdrawal 100,000 rands. When you withdraw this money from the credit side of your investment account, where are you taking it to? Where did you take it before you invest it?
You took it from the trust cash book.
Trust cash book. Therefore, you credit your investment account and then you credit your investment account here with 100,000 rands, and then you are going to debit your trust cash book with the same amount. You go to your trust cash book on the debit side, which is the left-hand side. You write there the 20th of June. Can say your section 86 investment or upside investment, 100,000 rand. Then you simply record it like this on the debit side of your trust cash book. Upside investment, 100,000 rands. And the money is back into your trust account now. You receive the money from the investment back into your trust account. Now, as soon as you debit your trust cash book with that transaction, therefore you are done with the invested amount. Then you can go to 1.2. 1.2 says receive interest. Now the question is, how much is the interest?
10,000.
10,000 rand. Now let's read that one-page document there. It says,
Advocate,
okay.
sorry to disturb. Should we not reference it as Section 86 for investment?
Yes.
Because if we reference it as APSA, we have already referenced it as APSA, and then we took it to the investment account, and now we're taking it out from the investment account back into the trust cash book. So should it not say investment Section 86?
Look, I think if you initially narrated it as APSA, it's better to still continue the same transaction. Then we know that this APSA money goes out of your trust cash book into APSA, and it comes back again from APSA back into your trust cash book. But you can narrate it anyway, whether your Section 86.4 or investment or APSA investment, because we already know that when you say APSA investment, that should be that Section 86.4. But any of those still okay.
Advocate.
The dates.
Advocate.
Yes.
I want to find out.
Yes.
When you take it from the investment back into the trust cash book account.
Yes.
We had it recorded in the purchaser's trust ledger.
No, you don't, because even when you did you touch the purchaser's trust ledger when you invest?
No.
Then you can't touch it now with the invested amount. You still don't touch it.
Thank you.
So the investment amount, the invested amount, you don't reflect it anywhere on the purchaser's trust. Still go back to your trust cash book.
Okay.
Yeah. Now the dates are very important. If you are given the dates, they are going to be taken as your point of reference. Please record the dates where you were given the dates. Now, there is an interest which we agree that it is 10,000 rands. Now let's go to 1.2. Receive interest. How do you receive interest? Debit your trust cash book and then credit lines. 95% credit legal practice fidelity fund with 5%. Now, we are going to receive the interest on the debit side of your trust cash book. Let's go to the debit side of our trust cash book. The same date, 20th of June. Interest, 10,000 rands. The debit side of your trust cash book, you record that interest of 10,000 rands. Now, after debiting your trust cash book with 10,000 rand interest, the question is, who are you going to credit? Who are you going to credit?
The purchaser in the LP
practice as well as purchaser.
The purchaser trust. How much you credit the purchaser trust with?
9,500.
95%, which is how much?
9,500.
500.
95%, which is 9,500 rand interest. 95% interest, trust cash book. Therefore, you are going to credit the purchaser's trust ledger account with that 95% interest of 9,500 rand from your trust cash book. Credit the purchaser's trust 9,500 rand, which is 95%. And then what happens to the 5%? And how much is the 5%?
5,000.
500.
500 rand.
500 rand. And the 500 rand, we all agree that it must be credited to the legal practice fidelity fund. Now let's open a T account for the legal practice fidelity fund. Let's open another T account.
Where do you record the 95%?
The 95% is credited on the purchaser's trust ledger account. Credit it on the purchaser's trust. Because remember, the purchaser is the one who instructed us to invest. And therefore, because he instructed us to invest, he must receive 95% of the interest. So Janine, you are correct. 500 rand to the Legal Practice Fidelity Funds Trust. That means we must go open LPFF Section 86 sub 4 interest account. And then we credit here that 5% of 500 rand interest trust cash book. Then you open the Legal Practice Fidelity Fund ledger, and on that ledger you are going to credit the LPFF Section 86 sub 4 interest account, and then you credit there the 500 rands from your trust cash book. That's your LPFF Section 86 for interest account. 500 rand is credited. That is all you do at step number 1. Now I need to go back to the manual. As I go to the manual there,
Advocate,
yes.
Why do we credit it rather than debiting the LPC
Exactly my question.
account?
You are receiving that money. You have received that money on behalf of the Legal Practice Fidelity Fund. Now, as you have received it as a credit there in that ledger, it means now you owe Legal Practice Fidelity Fund an amount of 500 rand. So you cannot debit LPFF Section 86.4 because you have never received the money. Because as soon as you debit it, you are saying you are paying them. How do you pay them before you receive it? So you need to receive it first on the debit side, and then you credit, and then later on if you want to pay them, and then you can credit your trust cash book, and then debit it, and then you know you have paid it.
Okay, thanks.
Advocate, can I please ask?
Yes.
So we credit both the purchasers trust ledger and the fidelity fund. I get it. This one side is 9.5 and the other is 500. So in total it's 10,000, which was debited from the trust account.
Yes, yes.
Oh, okay. So we have to credit both these accounts, the purchasers trust and the fidelity fund account.
Yes, correct. You have to credit both of them. Correct.
All right. Thank you.
Yeah. Tatamukwena, and because you also debited the trust cash book, correct? There is a balance of 500 from purchasers trust ledger. Yes, correct. Now, I want to read that step in the manual. As I read, look at your answers. It says that withdraw the Section 86.4 investment, including the interest thereon. Receive the invested amount and the interest in the trust account by debiting your trust cash book. Now, I want you to go on your trust cash book. Check on the debit side. Do you have the invested, how much was the invested amount?
100,000.
100,000 rand. Do you see that 100,000 rand debited on your trust cash book, isn't so?
Yes.
And you also see the interest also debited on your trust cash book, because they say debit your trust cash book with the invested amount and the interest. You see that?
Yes.
That's exactly what we have done. And then it says that credit your Section 86.4 investment account with the invested amount. Credit your Section 86.4 investment account with the invested amount. Let's go to our Section 86.4. Is your Section 86.4 credited with the invested amount?
Yes.
Yes.
So there we say withdrawal, credit there with that invested amount. And then say, and crediting the purchaser's trust account with 95%. Let's go to the purchaser's trust account. We are on page 84 of your manual, Matapo. On your purchaser's trust ledger account, let's look on the credit side. Have we credited that 95%?
Yes.
Yes.
That is 9,005. And then the Legal Practice Fidelity Fund Section 86.4 interest with 5% of the interest. Let's go to the Legal Practice Fidelity Fund interest account. Did we credit it with 5%, which is 500?
Yes.
Yes. that tells you that that is how you record that step number 1. I have gone through it like that because you'll see, if you look here on the next page, which is 85, there are diagrams there.
So
there, you will see the first one is your trust cash book, page 85. You will see the first one there is your trust cash book on top. You see that?
Yes.
And then on the credit side of that trust cash book, they say the day section 86 for 100,000 investment made. That means that is when you made that investment and then you debited your investment account. The next diagram is your investment account. You'll see there is debited with 100,000 rands. And then while there on the same investment account, you will see on the credit side of that investment account, day of withdrawal, 100,000 rands.
Yes.
Yeah.
Yes.
And go to the debit side of your cash book. Again, day of withdrawal, capital, 100,000 rands.
Yes.
And the next one, it says interest, 10,000 rands.
Yes. Yes.
And then you go to purchasers trust ledger account on the same page. The credit side is 9,005. You see that?
Yes.
And you see, because we're only recording from the day of investment until the withdrawal, you see on the purchasers trust, there is no indication of 100,000 rand. Because when you invest, you don't touch the purchasers trust. When you withdraw, you don't touch the purchasers trust. And then you go to the section 86 for interest day of withdrawal, the credit side is 500 rand. You see that?
Yes.
And what is very important here is that if you see on your investment account, you will see that that interest is not recorded in the investment account. You see that?
Yes.
Yes.
They don't want you to record it there. That is why I had to go step by step. Don't record the interest in your investment account. Just record it for the first time on the debit side of your trust cash book when you receive it. And that's it.
Okay.
Now let's quickly go to step number 2. What does step number 2 deals with?
Sorry, advocate.
Yes.
Yes, what's the date for the 95% and the 5% of the interest?
20 June.
20 June.
What's happening?
Oh, thank you. I just wanted the date for the 95% and the 5%.
Or the day, use the same date of the day of registration, the 20th. You can use that date until the end.
Sorry, advocate.
Yes.
I just want to clear something up here on the amount that we reimbursed, the 10,000 rand. How did you reference that?
The 10,000 rand in your trust cash book.
In the purchasers trust ledger.
In the purchasers trust ledger, the 10,000 rands, or for which day?
Of the 11th.
The 11th. No, you can just write 10,000 rand XTCB. It's all right.
Okay.
Yeah. Now let's go to step number 2. It says receive the bank guarantee or the bond. How much was the bank guarantee?
650,000.
650,000 rand. At step number 2, the bank guarantee that you were given by the bank then, you are going to receive it. Today, you are presenting to the bank and the bank now is giving you money. And how do you receive that? I've said there, debit your trust cash book and credit the purchaser's trust with the bank guarantee. Let's go to our trust cash book on the debit side. Let's go to our trust cash book on the debit side, 20th of June, bond or Standard Bank bond. Standard Bank bond, 650,000 rands. And who are you going to credit with the 650,000 rand? Who has applied for this bond?
The purchaser.
Correct. You are going to credit the purchaser's trust ledger account with 650,000 rand. Now, after you have debited your trust cash book, now you go to the purchasers trust ledger account on the credit side. The 20th of June, 650,000 rands ex-TCB. Therefore, the purchasers trust ledger account has now been credited with 650,000 rand. That shows that you have received that money on behalf of the purchaser. You have received that money on behalf of the purchaser, 650,000 rands.
Sorry, advocate.
Yes.
The guarantee of 650,000 rand. How do we know that now we have to pay it? We know because the property is now registered, or is there any, statement that tells us that we should now record the guarantee
receipt
that
of
was
the
made by the
guarantee.
client?
Now go to your study manual there, page 87. Is it 87?
87.
88.
88.
That should be 85.
85.
Mm-hmm. On your page 85, in the middle of the page there, you see number 2.
Yes.
It says there, receive the money guaranteed by the bank and or other institution or person, the bond. On the day of the return, the bank guarantee received earlier by the conveyancer will be handed in at the bank who issued it. The bank will make a direct payment. Now, we are at this stage now. You present the bank guarantee and the bank make a direct payment into your trust account. And when you receive that payment, you debit your trust and then you credit the purchaser's trust ledger account.
Okay, thank you so much. I did not see that. No.
Okay. Now let's go to step number 3. What does step number 3 says? Second bond. You see that?
Yes.
Second bond. Look, I'm trying to go a bit faster so that I can finish this exercise. Please, when you get home, try to read this step there in your manual because they explain full there. Try to read them there in your manual. For now, I'll just go through that one-page document so that I finish quicker. Mute yourself. Can you mute yourself? Hey, generation, can you mute yourself, please? Mute yourself, generation. Okay, let's go to step number 3. Step number 3 deals with the second bond. And there is no second bond. The second bond does not apply on this exercise. So therefore, we are going to skip step number 3. We'll deal with step number 3 tomorrow. We'll deal with exercise that where step number 3 applies. Now let's go to step number 4. Step number 4 says transfer of the purchase price. So far, we want to know how much is the purchase price. Now the question is, how do you transfer the purchase price? You transfer.
Guys, can you please mute yourself?
Please, people, can you mute yourself wherever you are? Gina, can you mute yourself? Okay, thank you. Now, step number 4, I say you transfer the purchase price. And then I said, how to transfer the purchase price? Debit the purchaser's trust and credit the seller's trust with the full purchase price. And now it says there, use a trust journal. Why do you use a trust journal? Is because this is a non-cash transaction, and with this non-cash transaction, you are going to debit one client's trust ledger account and you credit another client's trust ledger account. If you debit one client's trust and you credit another client's trust, you need a trust journal. You need to record a trust journal when you debit one client's trust and you credit another client's trust. Let me quickly record a journal here and I can put it on the screen here so that you can see how you draft that journal. Let me quickly put it here on the screen. Let me put it quickly, do it here, and I'll put it here on the screen just now. It says here, trust journal. Therefore, debit, purchaser, trust, credit, seller, trust. That is purchase price. Okay, a trust journal will be something like this. You will see there in that trust journal, the heading there says trust journal. That is, yes, step number 4, correct. We are at step number 4. In that trust journal, you debit the purchaser's trust because you are going to transfer the value of the purchase price from the purchaser's trust to the seller's trust. Therefore, debit the purchaser's trust and credit the seller's trust. Now the question is, how much are we going to transfer? How much is the full purchase price?
750.
750,000. Now, I want us to go to our purchaser's trust. Let's go to the purchaser's trust and add together the credit side. Let's add together the credit side of the purchaser's trust and tell me how much is the total. 100,000 plus 40,000 rands plus 10,000 rands plus 9,500 plus 650,000 rand. How much is the total? How much?
849,500.
849.
500.
809,500.
The number is too big. Should be
809,500.
Yes, should be 809,500.
Yes.
Now, if you take 809,500 and you subtract the debit side, which is 40,000, you are still left with more money than the purchase price of 750. Therefore, it tells you that now we can transfer the value of the purchase price from the purchaser's trust to the seller's trust. Therefore, debit the purchaser's trust in the journal, 750,000 rands. And credit the seller here, 750,000 rands. That is in your journal there. Debit the purchaser's trust, 750,000 rand. Credit the seller's trust, 750,000 rand. That is how your journal is going to look like. Debit the purchaser's trust, 750,000 rands, and then credit the the seller's trust, 750,000 rand. Now you go to the purchaser's trust ledger account. Let's go to the purchaser's trust ledger account. And then on the debit side, record the date, 20th of 6. And then you say purchase price. Purchase price, 750,000 rands. And then you're going to credit seller. You go to the purchaser's trust. You go to the purchaser's trust on the credit side, on the debit side. Purchase price, 750,000 rand, and that 750,000 rand, you are going to credit it to the seller's trust. Now the question is, do we have the seller's trust ledger account?
No.
No. Therefore, let's open one, another T account.
Advocate, the pace is just too fast. I think you're losing a lot of your passengers here.
Okay, let me get them. Now I'm saying you credit your purchase, you debited your purchaser's trust ledger account with the amount of 750,000, which is the purchase price. And the journal, remember the trust journal, it says you need to credit the seller with the same amount, 750,000. Now I'm saying, do we have the seller's trust ledger account? No, and if we don't have the seller's trust ledger account, we need to open the seller's trust ledger account with the 750,000 rands. Let's start here. Let's start here. We are at step number 4. We need to transfer the value of the full purchase price from the purchaser's trust ledger account to the seller's trust ledger account. We all agree that the purchase price is 750,000 rands. And I am saying, because you are transferring it from the purchaser's trust ledger account to the seller's trust ledger account, it's a non-cash transaction from one client's trust to another client's trust. That is why you need a trust journal. Then we opened this trust journal. In this trust journal, we debited the purchaser's trust 750,000 rands, credited the seller's trust 750,000 rands. Now, as it is in this journal, you must post it to your ledgers. This journal here says you debit the purchaser's trust 750,000 rand. Let's go to the purchaser's trust ledger account and do as the journal says. You came here on this purchaser's trust ledger account, you debited the purchaser with the purchase price of 750,000 rand. As you can see, it's reflecting on the debit side of the purchaser's trust ledger account. Now you go back to the journal. It says credit the seller's trust ledger account with how much? 750,000 rands. And now it means we need to open the seller's trust ledger account and credit as the journal indicates. Now let's open another T account for the seller. It's from the client's trust ledger account, another client's trust ledger account, correct? Now let's open another T account for the seller. Seller's trust. Then let's say here seller trust ledger. Now on the seller's trust ledger, the journal says we must credit, and therefore come here on the credit side, 20th of 6, that's that purchase price. 750,000 rands from the purchaser. Now we have opened the seller's trust ledger account. We have opened the seller's trust ledger account, and on the seller's trust ledger account, we credited that purchase price of 750,000 rands that we have debited on the purchaser's trust ledger account. So now we've got the purchaser's trust, and as soon as you have recorded it on the credit side of the seller's trust, that means you are done with step number 4. And then you go to step number 5, pay estate agent. Pay estate agent. And now the question is, who is liable for paying the estate agent's fee?
The seller.
The seller, correct. That means now we must pay the estate agent on behalf of the seller. Now the question is, how much is the estate agent's fee?
15,000 rand.
15,000.
15,000 rand. And remember I said, when you make a payment must be made from the trust cash book. That means we go to the trust cash book as Bandile indicate there, what you do in your trust cash book on the credit side. You are going to make that payment, and then you can say estate agent on the credit side, and then 15,000 rands. And we are saying we are paying on behalf of the seller. That means who are we going to debit that 15,000 rands?
seller ledger, seller trust ledger.
Seller's trust ledger account. Please remember, I said, do not open an account for the disbursement. Do not open an account for the estate agent. Just say, I am paying estate agent by crediting my trust cash book. On whose behalf am I paying the estate agent? On behalf of the seller. That means I need to go and debit the seller's trust ledger account. Let's go to the seller's trust ledger account and debit that 15,000 rands. Let's go to the seller trust ledger account and debit the 15,000 rand. 20th of 6, estate agent. Let us say 15,000 rands, TCB. Then you go to the seller trust ledger account. On the seller's trust ledger account there, you will see there on the debit side, on the debit side, we have debited the seller's trust ledger account with 15,000. That shows we are paying that on his behalf. Therefore, whatever that we are holding for him minus the 15,000 that we are paying the estate agent. Okay, that's all you do at step number 5. Now let's go to step number 6 quickly. Step number 6 says fees and VAT if registered for VAT. Remember here that they said we don't need to make provision for VAT. That means it's only going to be fees. And then with the fees, you are going to debit the purchaser, business, credit fee, and credit VAT. Okay. How much is the fee in terms of that statement?
350.
Check in your manual. How much is the fee?
350.
350.
350.
Yes.
Read that statement for the second time. Read that statement for the second time where it talks about 350.
It's 10,350.
10,000. 10,350.
But I didn't say look at the answers. I said look at the statement.
You debit purchase a further fee.
Because on June 4, we submitted a pro forma statement for the cost of the transfer of 40,000 including. So our fee is 10,000.
Fee is 10,000. 10K, 10,350, 350, 350.
10,000.
The 350, you got it from the statement. 10K, Mbali, where did you get the 10K?
The fee, I have 350.
And FM, how do you arrive at 10,350? FM, how do you arrive at 10,350?
Can I assist there?
Yes.
Remember when he paid the 40,000 for transfer duty?
Yeah.
We paid out only 30,000 and 10,000 was left for the fees.
Yes. Okay.
And plus the.
Okay, let me explain this to you like this very quickly. You will get statements of this nature where at the end of the statement you are not told how much the fee is. The statement will just say debit your fees against the purchaser, account to both the purchaser and the seller. They don't tell you how much the fee is. Like in this instance, you are not told how much the fee is. The statement just says a further fee of 350. That means there is another fee. And the question was, which other fee are they talking about? Now, if you get on the statement of this nature where you are not told how much is the fee, you must go to the day when you receive your pro forma cost. In this case, on the 4th, you will see that our pro forma cost is 40,000 rand, isn't so?
Yes.
And out of that 40,000 rand, you pay the transfer duty of 30,000 rand. The balance is 10,000 rand.
Yes.
And then when they say a further fee of 350, it's a further fee to the 10,000 rand that remained after you pay your pro forma cost. Every time they don't tell you how much your fee is. Just go to the day when you receive the pro forma cost and you say the pro forma cost minus the cost paid. Whatever is the balance is your fee. In other words, in this statement, if they did not say a further fee of 350, that means your total fee will have been 10,000 rands only. But here they say a further fee of 350, therefore is 350 to the 10,000 rand that remained after you pay your costs. Now the total fee is 10,350 rands. And that 10,350 rand is a fee. That means what journal do we need now?
The business.
What journal do we need?
A fees journal.
Fees journal. Yes, quickly. Let's draft a fee journal. Let's do it quickly. Let's draft a fee journal. Let's quickly do a fee journal.
The T again.
No, the journal. We are still on the journal.
Sorry, in the fee.
You are cutting.
Sorry, advocate.
Yes.
It's easier for us. May we, in the fee journal,
yes,
specify the amounts? For instance, if we in the journal state that 10,000 rand from the pro forma that was left after the transfer duty was paid, plus the additional fee of 350.
You mean you explain it in your journal?
Yes, may we do that?
Yes, you can do that. Remember, the purpose of the journal is for you to explain in detail what that transaction is even before you move it to your ledgers. So you can explain as much as you can in the journal. Okay. But you see here, I've just wrote the fees collected, but you can explain it to say the 350 is the further fee, the 10 is the one that remains there. That is still okay, because that is the purpose of a journal. Explain what is this transaction and how you arrived at it. You can even say that in your journal. That is the fees journal. Debit the purchaser's business. Remember, the purchaser must pay the fees and then credit the fees. And I just wrote fees collected there. Debit the purchaser business, credit the fee, and that you debit the purchaser business 10,350 rands, credit fee 10,350 rand. That is how that account will look like now. Debit the purchaser business 10,350, credit fee 10,350. That's how you record that transaction.
Sorry, advocate. I'm not tired here, but the business.
Somebody, can you switch off your phone? Your phone, the alarm, the tone there is making noise. Okay, again, you were saying
the business account, the purchaser business account.
Yes.
Doesn't have any money in because that was already used for that payment. The only place where I last saw that 10,000 rand was in his trust account. So wouldn't you have to fee the money from the purchaser's trust account into his business account, into your business account, and then from there pay it to yourself or whatever?
Yeah, what is happening now is that we are not yet paying ourselves. We are still raising the fee. What we are saying, we are going to do later after you have raised the fee. So every time the client owes you, you raise the fee by debiting their business ledger. There is no need for business ledger to have money. So the business ledger simply saying, whatever is the balance here is what you owe me. So as soon as you record this money in the purchaser's business, you'll see there's going to be a balance of 10,350. Now that means the purchaser owes you that money. And later on, we are going to free money from his trust to his business so that we can pay ourselves. So at this stage, we are not receiving anything. We are not paying ourselves. We are just saying we have done the job. We are now raising the fee.
Okay, so you're creating a debt, and then you from that debt gets paid from the trust account.
Correct. We are at this stage we are creating a debt. Correct.
Okay, thank you, Advocate.
Okay.
Advocate, show me the journal again, please.
Okay, that fee journal is this one. That's the fee journal. And I'm saying in this fee journal, you are debiting the purchaser's business and then you credit your fee. And then I said there, fee is collected. And the total fee that you debit the purchaser's business, 10,350, and then you credit your fee at 10,350.
Okay.
Okay. Again, this is how you got the fee. Remember I say, if the question doesn't tell you how much your fee is, you must go to your question as it is. Check on the day where you have received the cost value or your pro forma costs. And then you say, I have received a pro forma cost of 40,000 rands. And out of the 40,000 rand, how much cost did I pay? You paid the cost of 30,000 rands. How much is the balance? The balance is 10,000 rand. If you are not told how much your fee is, 10,000 rand will be your fee. Like in this instance, we are not told how much the fee is. We just say you are charging the purchaser with a further fee. Now the question was, a further fee to what? That's when we go to the day when we receive the pro forma cost and we say, how much did we pay out of the cost? 30,000 rand. Therefore, the balance is 10,000 rand, and therefore 10,000 rand is your fee. When we say a further fee, it's a further fee to that 10,000 rand. That's why our 10,000 rand ended up, our fee ended up to being 10,350 rand. That is that 10,000 plus the 350. Hence, you can see in the fee journal, we debited 10,350, created fee 10,350 rands.
But Advocate, according to the set of facts, we said 95% goes to the client and the 5% goes to the LPC.
No, that is interest.
Investment.
That is interest. I'm not talking about the interest. I'm talking about the pro forma cost. Before you receive that interest, look into your trust cash book. Before you receive that interest, you see there's 10,000 rand above on the credit side.
Advocate.
May
On the
please ask the advocate to finish because we
Don't confuse the 10,000 rand that I'm talking about with the interest. It's not the interest. Remember, when you received the 40,000 rand from the client, that was not interest, isn't so?
Indeed, that's correct.
Yeah, no.
Yeah, that's not interest. That was the cost that you received from the client. Out of that 40,000 rand, you paid the cost of 40,000 rand, and there was 10,000 rand balance. Later on, you receive the interest of 9,500 rand. So that 9,500 is a different thing.
Yes, I do follow. Thanks.
Yes. So this is your fee journal. Now, that is how you deal with your fees at step number 6. Now let's quickly go to step number 7. We are about to finish now. So let's look at step number 7. That step number 7, we say this is a step where you pay yourself. Now, how do you pay yourself? Before you pay yourself, you need to know how much you are owed by your client. And at this step number 7, I always say the first thing that you need to do when you get to step number 7, you need to balance your client's business ledger account, because your clients can only owe you in their business ledgers. in this case, we only have the purchaser's business ledger account, isn't so?
Yes.
Yes.
Go to the purchaser's business ledger account. Oh, sorry. Before we go there, that fee general there, it says debit the purchaser's business 10,350. Let's go to the purchaser business and debit that amount. Where's my account now? Let's go to the purchaser's business ledger account and debit that. Lost my account here. Seller's trust. Oh, this is a purchaser business. Go to the purchaser business on the debit side. Can just say on the 20th of 6, can just say fees. 10,350 rands. Oh, on the purchaser's business account on the debit side. Fees 10,350 rand. And as soon as you debit the purchaser's business, then you need to open another T account for the fees. Let's open another T account for the fees.
What would the reference be for the 10,350 under?
You can just
purchases?
you can just indicate it as the fees.
Okay.
Then you own land.
Okay. Let's open a fee ledger. Let's open a fee ledger quickly. Let's open a fee ledger, and then on that fee ledger, we are going to credit the 20th of June, that 10,350 rand. Again, can say purchaser business. In your fee ledger, that's the fee ledger there on top. You open a fee ledger, the date, 10,350 rands, purchaser business. That's your fee ledger. You credit there. And then as soon as you have credited there, then we can quickly go to step number 7. And that's where I said, before you pay yourself, you need to know how much you are owed. And you'll only know how much you are owed until you balance your client's business ledger account, because your client owes you in business. Therefore, let's go to the purchaser's business ledger account and balance it and see how much the purchaser owes us in business. Let's go to the purchaser business. The debit side of the purchaser business is 30,000 rands plus 10,350 rand, which gives you a total of how much?
40,350.
40,350. Now you say 40,350 minus the credit, minus the 30,000 that he has already paid. How much is the balance?
10,350.
10,350. That means the purchaser owes us 10,350. Now we need to go and release the funds from his trust ledger account to the business so that we can pay ourselves. That's when we are basically doing your step number 7.1, the value step. It says there, 7.1, first balance the client purchaser or seller business, and then the trust ledger. And then debit the client or the purchaser's trust ledger and credit is business ledger, and then use a transfers journal. Now, before we do this transfers journal, okay, we'll do that later, don't worry about it. Now, but what is very important here is that we balance the purchaser's business ledger account, and the purchaser business ledger account has a balance of 10,350, and we are saying this is what the purchaser owes us. Now we need to transfer that money from the purchaser's trust ledger account to the purchaser's business ledger account so that we can pay ourselves. That simply means we need to debit the purchaser's trust and we credit the purchaser business. When you debit the purchaser's trust and you credit the purchaser business, you need a journal. Now the question is, what journal are we going to use at this stage?
It's a fee journal.
Payment journal.
Transfer journal.
It should be a transfer journal. Look at step number 7.1. I say NB. Use a transfer journal. You see that?
Yeah.
Let me explain this again. When you get to step number 7 of conveyancing steps, this is the step where you must pay yourself. Now I'm saying for you to pay yourself, you need to know how much you are owed so that you can pay yourself. Now, in which account do you record what the client owes you?
Business.
Yes, you record what the client owes you in their business ledger. Now, we went to the purchaser's business ledger account, we balanced it, and how much was the balance? 10,350. That means the purchaser owes us 10,350 rands. Now that we know he owes us 10,350 rand, we need to transfer that money so that we can pay ourselves, isn't so? Now the question is, from which account are you going to transfer that money before you pay yourself? And I am saying, you are going to transfer that money from the purchaser's trust ledger account to the purchaser's business ledger account. That is what is dictated there at step number 7.1. You are going to transfer what the purchaser owes you from his trust ledger account to his business ledger account so that you can pay yourself. Now, when you transfer from the purchaser's trust to the same purchaser's business, you need a journal. And I am saying that journal is called a transfer journal. Now we need to record a transfer journal together. Let's go and record a transfer journal and record exactly what I was saying now. Let's quickly record a transfer journal. Let's record it here, transfer journal. This transfer journal, you are going to debit purchaser's trust, and then you credit purchaser business. You can say transfer of value. In this journal here, in this journal, you debit, that is a transfer journal. You debit the purchaser's trust, 10,350, and credit the purchaser business, 10,350 rand. So I'm going to put the value there, 10,350, credit business, 10,350. That is the transfer journal. Debit the purchaser trust 10,350, credit the purchaser business 10,350, and that is transfer of value. That is in your transfer journal. As soon as you record it like this in your transfer journal, then you can post it to your ledgers. Debit the purchaser's trust. Let's go to the purchaser's trust ledger account and debit that amount. Let's go to the purchasers trust. This is the purchasers trust on the debit side. Then you start there with the date, 20th of 6, that value 10350, and therefore purchaser business. Then you go to your purchaser's trust ledger account on the debit side. On the debit side of your purchaser's trust ledger account, value there 10,350, and then you're going to credit the same purchaser's business ledger account. Now, as soon as you debited your purchaser's trust, you go back to the journal. The journal now says credit the purchaser's business. Therefore, let's go to the purchaser's business ledger account and credit that value. Let's go to the purchaser's business ledger account on the credit side, which is your right hand side. And then the 20th of 6, value 10,350, again purchaser's trust. And then on the purchaser's business, it's a credit. On the purchaser's business is a credit. Credited 10,350 rands. On the purchaser's business. That is your step number 7.1. You transferred what the client owed you from their trust ledger account to their business ledger account so that you can pay yourself. And when you get to step number 7.2, on my notes there, you'll see I said the cash step. In brackets I said, with the same amount in 7.1. How much is the amount that we dealt with in 7.1?
10,000.
10,350. And I said, with the same amount in 7.1, you credit your trust cash book and you debit your business cash book. Let's go to our trust cash book and credit it. Let's go to our trust cash book on the credit side, the 20th of June. So it purchaser 10,350 rand, and it goes to our business cash book. Now, in your trust cash book on the credit side, you record that value. Purchaser 10,350 rands, and that value is going to your business cash book. That value is going to your business cash book because you'll see there on that step I said, credit your trust cash book, which is what we have just done. And then it says, debit your business cash book. Now, let's go to our business cash book and debit as per the journal. Let's go to our business cash book and debit. This is our business cash book, and then we are going to debit here 20th of 6, purchaser 10,350 rand XTCB. You'll see here in your trust cash book, in your business cash book, on the debit side, purchases are there 10,350 XTCB. Therefore, the money is now in our business cash book. Then at this stage, then we can use the money if we want to. It has arrived in our business account. Step 7.2, simply with the amount in 7.1, credit your trust cash book and debit your business cash book. Now let's go to step number 8, the last step. Then everybody can go home now. Or you're already home. I'm the only one who should go home. Let's go to step number 8. It says account to your clients. Palesa, you should never even try that. You're gonna be in trouble. Gina, you are home. You should be having a cup of coffee next to you. Okay. Now, step number 8, account your client. What do we do when we account our client? We are basically, oh, you're still at work like me. Okay, we'll finish now so that we can travel. This is the last step. Now, at step number 8, we are, yes, I'll repeat it in Mbogeni. Kandara, I see you. Now, at step number 8, you are accounting to your client. That simply means you are paying back your client whatever that you are still holding for them. Because you paid yourself, and then after paying yourself, you've got no reason to still keep their money. Now you need to pay them. Now, you can't pay them until you know how much you owe them. Now the question is, which account do you record what you owe each client? Which account do you record what you owe each of your clients?
Trust account.
Trust cash book.
Which one? If I want to know how much I owe the purchaser, which account do I balance?
Purchaser
cash book.
Trust cash book.
Now, if you balance a trust cash book, it will show you the money that you are holding for the purchaser, for the seller, for the legal practice counsel. Client's trust ledger, Michelle, you are right. Client's trust ledger, Laude, that's correct. You balance every of your client's trust ledger account, it will give you the balance. Whatever balance you get is what you owe that client, and then you must pay that client. Let's quickly go to the purchaser's trust ledger account. The purchaser's trust ledger account, the credit side was 809,500. Just record 809,500 minus the debit side, minus 40,000 rands, minus 150,000 rands. Okay. What's your purchaser's trust? You have purchaser's trust ledger. You have the purchaser trust ledger account with you?
Yes.
Yes.
Come again with the figures.
The purchaser trust ledger, the credit side, when we added it later, it was 809,500. Now I'm saying you take the credit side, you subtract the debit side. Now that means 809,500 minus the debit side, minus 40,000 rands, minus 750,000 rands, minus 10,350 rand. How much is the balance?
9150.
9150. That is what we owe the purchaser, and we must pay the purchaser that amount of 9150. Therefore, you come here on the credit side of your trust cash book, you make a payment. 20th of 6, payment 9150, and you are making this payment to the purchaser. Now, on your trust cash book, on the credit side, take the payment 9150, and then you are paying the purchaser. And then you go to the purchaser's trust ledger account. Because it's a credit here, on the purchaser's trust ledger account, it's going to be a debit. And then you say here, on the purchaser's trust ledger account, on the debit side, 20th of 6, cash, 9,150 rands XTCB. Now you go and debit the purchaser's trust ledger account with the same amount, cash 9150 XTCB. Therefore, it means you have accounted to the purchaser. You pay the purchaser whatever that you are still holding for. You do the same thing with the seller.
I'm lost. Advocate, I'm lost.
I will get lost while I'm here, man.
I advocate.
Advocate,
Okay.
let's repeat how did you
Okay, let's start here. We want to see how much we owe our clients, isn't so? And I am saying, for you to know how much you owe your client, you must balance that specific client's trust ledger account. Now, we balance the purchaser's trust ledger account. We all agree that the balance in the purchaser's trust ledger account was 9150. That is the balance in the purchaser's trust ledger account, 9150. Now, this 9150 is what we owe the purchaser. Now, we need to pay the purchaser that 9150. From which account do you make payment as a legal practitioner?
Trust cash book.
Trust cash book. That means for you to pay the purchaser, you need to pay the purchaser from your trust cash book. Now, if you look at those steps there, step number 8 says, credit the trust cash book, debit each client's trust ledger account. You see that? Now, we all agree that we owe the purchaser an amount of 9150 and we must pay the purchaser. And we agree that to pay the purchaser, we must credit our trust cash book. Now, let's come here on our trust cash book. We credit our trust cash book 9150. In other words, we are transferring money from the credit side. We are making a payment from the credit side. Now remember, when you credit your trust cash book, somebody must be debited. Now the question is, who are you paying? Who are you going to debit?
Purchaser.
Purchaser. Therefore, you come here on the purchaser's trust ledger account on the debit side. You debited the purchaser with that cash of 9150 to show that you have paid him. Now you don't owe the purchaser anything at this stage. You have paid whatever that you are still holding for the purchaser. You can close the purchaser's file. Now I'm saying you do the same thing with the seller. Let's go to the seller's trust ledger account. Let's go to the seller's trust ledger account. Let's balance the seller's trust. The credit side is 750,000 rands. Now, 750,000 rand minus the debit side. How much is the balance?
735,000.
735,000, and that means we owe the seller an amount of 735,000 rands. You need to be very careful.
What do you minus from 750?
You need to be very careful there. 73,005. You see that? MJ Ackerman, also be careful. 73,005. You need to add another zero there. If you make that mistake in the exam, they're not going to give you a mark. Now, what I was saying is, remember the purchase price was 750. Out of that 750, we subtract the 35,000 that you have paid the estate agent on behalf of the seller, which is reflecting on the debit side of the seller's trust. And then the balance is 735,000 rands. And therefore, the 735,000 rand is what we owe the seller. Now we need to pay the seller an amount of 735,000 rand. Now the question is, from which account are we going to make this payment?
Hello.
From which account do we make this payment?
Trust
cash book.
Trust cash book. Then you go to the credit side of your trust cash book, you make another payment, 735,000 rands. And the question is, who are you going to debit? Who are you paying?
The seller.
The
The
seller.
Correct. You credited your trust cash book and then you go to the seller trust ledger account. You credited your trust cash book here, 735,000 rand, which is a payment that you are making to the seller. And then you go to the seller trust ledger account, you are going to debit 20th of 6 cash, 735,000 rands XTCB. And then, as you can see now, we have now debited the seller's trust ledger account 735,000 rands. This is the seller. Oh, where is it still? Yes, this is the seller's trust ledger account here. As you can see, we have debited there 735,000 rands of the amount that we just paid over to him. Debit 735. Therefore, we no longer owe the seller anything. And the last account that we need to account for is your legal practice fidelity fund section 86.4 interest account. Let's go there and balance it. Your LPFF section 86.4 interest account. How much is the balance on that account?
500.
That means we must pay 500 rand over to that account. And again, the same thing we have done with the rest. You go to the credit side of your trust cash book, 20th of 6. That's a payment, 500 rands, and you are going to pay LPFF. On the credit side of your trust cash book there, payment, 500 rand, legal practice fidelity fund. Legal practice fidelity fund, payment of 500 rands. And after crediting it there, you go to the legal practice fidelity funds account and then you debit. So then we go and debit. Can here 50th of 6, cash 500 rands and then XTCB. And then we have now accounted to the legal practice fidelity fund with that 500 rands. As you can see there, we have just debited the 500 rand on that account. Now we have accounted to all our trust creditors. We have accounted to all our trust creditors. We have accounted to all our trust creditors. Now, the last thing that we do is let's go back to our trust cash book. Can you add together the debit side of your trust cash book and tell me what is the total that you get? Please quickly calculate it yourself there. I want to see if you have recorded the correct value. How much you get? Somebody says 910,000 rands. Is that what you get?
That's correct.
Correct. 910,000 rands. Let's quickly check something here. 910,000. And can you also get at the credit side? Mabatu, you need to be very careful. I've seen that many times, even in the exam. Student will write 910K. We don't know what that means. If we see 910K, we are going to give you a wrong on it. So make sure you write everything in full. It's not only Mabatu. I know that many of us write in that way. So please avoid that at all costs. Make sure you write everything in full. All the zeros must reflect there. Sorry, thank you for doing that. Otherwise, it reminded me. And when you add the credit side, how much did you get?
910.
910.
Also 910. Therefore, that means our trust cash book balances And then the last account that you balance there is your business cash book. Can you add the debit side of your business cash book and tell me how much you get? The debit side.
40,350.
40,350 rands. Now from the 40,350, you minus the credit side. Minus the credit side.
10,350.
10,350, and then on the credit side or on the right hand side of your business cash book, just write the balance brought forward 10,350. That is the balance in as far as your fees are concerned. Now, as soon as you have recorded that balance, it means you are done with this statement.
Advocate, you're so fast, and this is very critical, this section, the way I look at it. And
it's very critical. Yes, I know that I was going a bit faster towards because
we didn't do justice.
I've seen many of you are already complaining about the 8 o'clock. So what I'm going to request you to do is that try to practice the same exercise again. Do not do a different one if you can, but if you can do that. But please try do the same exercise. Don't look at the memo. Don't look at what you have done. Maybe when you try to correct yourself, you can look at what I was saying here. But try to do the same exercise. See where you have lost us, so that tomorrow when I do another exercise here, I should be able to pick you up somewhere.
So are we going to do a similar exercise tomorrow?
We're gonna do convincing. We're still gonna do a convincing, and the issue of the accounting statement also needs to be done. I'll show you again tomorrow how you do an accounting statement on a convincing transaction like this. So, but please, for tonight, try redo this type of a same statement that we have done. See, the question is in your manual. The questions regarding the checks in the exam, you are very much unlikely to be tested on the checks because they have been phased out. So, lucky enough, your question paper it normally set some few months before the exam. So whoever is setting the exam knows that the checks have been phased out and that we are no longer teaching you about the checks. So very much unlikely to get anything dealing with the checks in your exams.
So, Advocate, is there any way we can just get some snapshots of the notes you've made?
The ones that are where I've been writing now.
Yes, if they can just email it to us or post it somewhere so we can just use it as a reference.
Okay, I'll try to get the lady in the office tomorrow to load it down on my email address so that I can forward it to whoever needs it.
Advocate,
yes.
Can you please repeat where we got the 9150? Where did we get that from?
The 9150, you went on your purchasers trust ledger account, né? And then you added the purchasers trust ledger account. The credit side was 809,500. And then you said 809,500, which is the credit side, minus the debit side. If you take that figure and minus everything on the debit side, that means minus 40,000 rands, minus 750,000 rands, minus 10,350, you'll see the balance will be 9150. And we say that is the amount that you owe the purchaser. That is why you credited your trust cash book with the same amount and then you debited the purchaser's trust.
Thank you.
Councillor, just a quick question too.
Yes.
You are saying the journals, no? You
Yes.
only the journals whereby is amount from one ledger to another, right?
Yes. So if you are transferring from ledger to ledger, then you need to record a journal.
Okay. And then when you transfer from one cash to another, is it
So
possible to?
let me just quickly. I'll answer you there. There's an okay. I'll give you a chance to raise it. Okay, you can continue.
From one cash book to another, what do you use?
Now, from one cash book, any transaction originating from your cash books, do not make a journal. If it's a transaction from your cash book or from your business cash book or to your business cash book or to your trust cash book, do not make a journal.
Okay, but do you use only transfer? What do you use there?
No, you just record the transaction.
Okay.
Either debit and Israel, you were saying something there. Your message disappeared. Maybe you can unmute yourself and ask your question. Israel?
Thank you, Advocate. I was asking, in the section 86, subsection 4 for investment, ABSA,
Yes.
do we record the 10,000 interest transaction?
Yeah, no, the 10,000 interest, don't record it in the section 86 investment. Do not record it there. Just receive it for the first time on the debit side of your cash book, and then do that apportionment of 95 and 5% to the purchaser and to your LPF section 86 for interest account. But don't record it in your investment account.
All right. Thank you. Thank you, Advocate.
Okay. Any question again?
Yes.
Okay.
So from what I gather thus far, no?
From
what I gather thus far, I think most of the focus in terms of LPBK will be on bank reconciliations, conveyancing, and correspondence.
Yeah, look, that's the focus more in terms of your guide. But there are a number of things that I'm going to still do with you, where it's basically things that I'm going to do with you that which are the normal questions in your exam, which in some instances you will not be able to make them up yourself from the manual. So it is better that I explain them to you so that when you get something of that nature in the exam, you know already how to attempt it. But your manual, yes, it's more focused on the bank recon, conveyancing, and the correspondent.
Thank you, Advocate.
How did we find out that the purchaser owes us 10,350? Karabo, go to the purchaser's business ledger account. Go to the purchaser's business ledger account.
Sorry, Advocate.
Yes.
Are we done with the class?
Yes, we are done with the class. If you want to leave, you can log out. I'm just quickly trying to help the ones that still have questions.
Thank you, Advocate. We'll have to recap tomorrow when we start.
Okay, no problem.
Thank you, Advocate. It's time to go home. Goodbye, all. Have a good one. Bye.
Okay, thank you. Karabo, you wanted to know where we got the 10350. Now go to your purchaser's business ledger account. On the debit side, we had 30,000 rands plus 10,350, and it was 40,350. On the credit side, it was only 30,000 rands. And we said 40,350 minus the credit side, which is 30,000 rand. The balance was 10,350. That is where we got that 10,350. And then we transferred that 10,350 from the purchaser's trust ledger account to the purchaser's business ledger account. As you can see, if you look at the purchaser's trust on the debit side, you will see the same 10,350. And then it corresponded with the 10,350 on the purchaser's business on the credit side. And after that, with the same amount, you went to your trust cash book on the credit side, there should be 10350. And then from the credit side of your trust cash book, and then it was debited into your business cash book. That means now the money is in your business account. Rebalance the various journals. Now the journals, you don't need to balance them. You just leave them as they are. Thank you, Karabum. The journals, and the way we recorded them, you leave them as they are. The business cash book. This is the business cash book here. You see in your business cash book, there's also a balance brought forward, 10,350. Then you also have your trust cash book. Where is the trust cash book now? Things are getting lost now. This is your trust cash book here. With all the transactions. That's your trust cash book. And you can see there. Now, after recording everything, when you add the debit side, it will give you the same amount as you got on the credit side. That is your trust cash book. So if it's done, and therefore it should balance like that. Okay.
Advocate. Advocate, I may ask something.
Yes.
Is this lecturing going to be recorded?
Yeah, it's being recorded. It's being recorded even as you speak now. You are being recorded.
Okay.
Yes.
But it is not yet made available on our system.
Apparently, they made it available piece by piece. I had some saying our first lectures are already on the system.
Okay.
Yeah. I don't know how regularly they put on the system, but our first lecture, they say they're already on the system.
No, I'll appreciate because we had some interruptions here and there.
Okay. Now you'll get it there. Yeah.
Thank you, Advocate.
Thanks, man.
Advocate.
All right.
Yes.
Advocate, I had a problem around 5, so I couldn't log on on time.
Okay.
So I just wanted some guidance maybe on what to look on so that tomorrow I may be on the same page as others. I just want to cover some ground during the night and maybe tomorrow.
Look, today we only concentrated on convincing, in particular, that convincing question on that start on page 87 of your manual.
Yes.
And I've said to everybody that I would prefer that everybody go and they redo the same question.
Yes.
So that tomorrow, because there are a lot of people who still shows that they did not get what I was doing. So tomorrow I'm going to sort of restarting because I'm going to explain everything in details as we have been doing today.
I would appreciate this.
I'm definitely going to touch on them as if I have not done them before.
Thanks a lot. So I'll just read and
yeah.
Yes.
Okay.
Thanks a lot, sir. Thanks a lot.
No problem. Oh, Mishad. Swat. Thank you.
Good night, Advocate.
Knock off. Thank you, Dora.
Advocate.
Yabo.
So could I please ask, how do you calculate the bank statement balance?
like the first question in the list of questions you gave us.
Where you are not given a balance.
Yes.
What you do is, in your supplementary cash book, in your cash book, the balance is already there. The only balance that you are required to calculate is the bank statement balance. Now, what you do is you are going to draft that bank statement thing, but you need to use the bank, what do you call it? The bank layout. Now, remember when we started, we always say balances per bank statement.
Layout.
Yeah, use the bank statement layout. Now, every time when we start, every time when we start, we always start by saying balances per bank statement. But at this time, when you don't have a balance, where we normally write balances per bank statement, you write balance as per cash book. And then you leave that space as it is. You record all your transactions the same way that you're going to record debits, credit, debits, credit. And then you balance your cash book. When you are done balancing the cash book, and then you take that cash book balance at the bottom of your cash book, it's going to be your opening balance in your bank statement, because remember you said balance as per cash book. So you take that cash book balance and then you record this there in your bank statement as if it's the opening balance. And then you add, now you calculate downwards.
Thank you.
Yeah. But if we get time, maybe if we could have a class, I don't know, over the weekend or when, I will also do something like that again.
Okay, but at the end of the bank recon,
Yes.
the balances should be the same.
No, at the bottom now, you are going to say balance as per bank statement. In other words, you are just turning it upside down.
Oh, okay. All right. Okay.
Yeah.
Okay, thanks. So they won't.
She was still going on. I'll also listen to you.
No, I was just saying, so basically the totals won't agree.
Yeah, the total won't agree.
Okay, because I was very confused. I was trying to make them agree. Okay.
No, they don't agree. Don't make them agree. They don't agree. Yeah. Okay. Hey, smart.
That fees ledger.
Yes.
It only has the credit side. Is it not supposed to balance?
No, fee ledger will always have the credit side only.
Okay.
Unless if the case where you give the allowances, which is something that we'll do at correspondent, but that one in conveyancing, it will only have the credit balance only.
Thank you and good night.
Okay, good night to you too, man.
Good night, advocate. Thank you.
Thank you. Good night, everybody. Thank you, Karabo.
Good night, Ntate Maphelela.
Re a leboga mme.
Awa ya hae ke bosiu yo.
Ai re go khutsa ka nnete.
Awa tsa mo khutsa ona pile ke a o bona.
Okay, ma'am.
Okay, bye bye.
Bye.
Bye.